In Q2, we have done fairly well. Our revenue grew by 3.8% in reported currency, and in constant currency terms 4.2%. Volumes grew by 3.1%, 0.7% on-site and 4.3% offshore. We had strong client additions in Q2. We added 68 new clients, net addition of 37. Out of the 37 new client net additions we had, 5 are US Fortune 500 and 4 are Global Fortune 500. We also had good deal wins. We had 5 to 6 large wins in Q2. Generally, when we categorize large opportunities, these are $50 million plus and multi-year opportunities. Pricing has remained stable. In reported currency terms, it improved by 0.6%. In constant currency terms, it improved by 0.9%. On-site improved in constant currency terms 1.7% and offshore by 2%. The growth has been all around. The top 25 grew by 3.8% and the non-top 25 grew by 3.7%. Verticals have shown growth. Now, from a product and platforms side, we had 15 new clients which we added in Q2. We are entering Q3 and Q4. Q3 and Q4 are generally soft quarters for us. In Q3, you have holidays and furloughs. In Q1, the new budget gets closed. At the same time, we have to close the opportunities and start realizing revenue from them. Q3 and Q4 are generally soft quarters. We have also seen some weakness in one of our strong verticals, the retail and CPG. They have concerns over holiday spend and government shutdown, and that is impacting their decision-making capability. Retail and CPG are strong verticals for us, and we have seen some weakness. As I have said in the past, our guidance is always a statement of fact. We have revised our guidance from 6 to 10 to 9 to 10% in reported currency terms, which is a 9.9 to 10.9% in constant currency terms. Thank you.
Good morning, everyone. Just to give a flavor on the margin, our EPS for the quarter is at 42.12 rupees. This includes a provision of 219 crores for visa-related matters. EPS without this is rupees 45.96, a growth of 10.6%. The operating margin for the quarter is at 21.9%. This is 1.7% lower than the previous quarter. Excluding the provision for visa-related matters that I just said, the margin is at 23.6%, same as that of last quarter. We have seen significant volatility in the currency during the quarter, with rupee depreciating by 16% intra-quarter and 11% on a quarter-to-quarter basis. We have outstanding hedges of $1.1 billion as of September end. We had given 8% compensation hike to our sales folks effective 1st May. We also gave an 8% increase to our employees in India and 3% sales hike to employees on-site effective 1st July. This had impacted our margins for Q2 by about 300 basis points. The rupee depreciation of 11% gave us a gain of 250 basis points on the margin front, which was offset by the 300 basis point impact because of wage hike during the quarter. If you look at the operational parameters that Mr. Shibulal was talking about, I think we have done reasonably well. Our utilization for the quarter has gone up to 77.5%, excluding trainees, from 74.3% last quarter. The volumes have seen an increase of 3.1% on a sequential basis. Our on-site effort mix is down to 31.2% from 32% last quarter. Our cash and cash equivalents are at 26,907 crores, and our DSO is at about 62 days for the quarter. We have revised our rupee guidance to 21 to 22% for FY 2014. We have converted our dollar guidance of 9 to 10% and used an exchange rate of 62.61 for the next 2 quarters.